Here are 9 income tax changes for 2024 that could impact your 2025 federal income tax return. Not all of these changes will apply to you, but the changes to the tax brackets affect everyone. Hopefully you can use some of this information to do some tax planning. Some of these tax changes may seem small, but they can have a big impact on how much you end up paying in taxes. Let's start with the first income tax change, which affects the foreign earned income exclusion. This change is especially important for taxpayers living and working abroad. If your income is earned in a foreign country, or if your employer is in a foreign country, you may be able to take the foreign earned income exclusion. The income exclusion has increased to $126,500. If you don't know whether you qualify to take this exclusion, please click on the link above to find out more about it. Then there's the second income tax change, which is all about the electric vehicle or EV tax credit. If you plan to purchase an electric vehicle this year, this one is crucial. For certain new electric vehicles, you can get a tax credit for up to $7,500. For used electric vehicles, the credit is up to $4,000. Some dealers have agreed to give buyers a discount on the price of the vehicle in exchange for the tax credit, so you will not have to wait until tax time to take the credit. You do have to check up front to make sure that the dealer is willing to give a discount, because they are not required to do so. If they aren't willing to give you the discount up front, and if you qualify, you can take the credit when you file your tax return. When it comes to the EV tax credit, there are a lot of rules, and some electric vehicles don't qualify for the credit. If you want to know more about how the EV tax credit works, please click on the link above. The third income tax change mostly impacts investors. Now more of your income is exempt from capital gains tax on your capital gains and qualified dividends. This means that you might not have to pay capital gains tax at all when you sell investments or when you receive dividends. If you're single and your taxable income is $47,025 or less, and you sell any of your investments or receive dividends, you will not have to pay capital gains tax. If you filed head of household, it's $63,000, and if you're married filing jointly, it's $94,050. The income ranges for the different capital gains tax rates have shifted as well. For instance, if you're single and your taxable income is from $47,026 to $518,900, the capital gains tax rate is 15%. If you're single and your taxable income is more than $518,900, your capital gains tax rate will be 20%. Please take a look at your screen for the income ranges for other filers. And the fourth tax change is all about a health savings account, or HSA. A health savings account helps you lower your taxable income because you set aside money before taxes to use for medical expenses. So this would be expenses such as co-insurance, deductibles, and co-payments. In 2024, the amount that you can contribute is higher than it's ever been. If you have an individual health plan, you can contribute up to $4,150. If you have a family plan, you can contribute up to $8,300. Of course, there are all kinds of rules you have to follow. So if you want to know more about an HSA, please click on the link above. The fifth tax change affects your flexible spending account. With a flexible spending account, you set aside money from your paycheck for health care and child or dependent care expenses. The money is taken out of your paycheck before taxes are taken out. The maximum amount that you can contribute for 2024 is $3,200. If you aren't able to use all of your flexible spending funds, you can carry over a maximum of $640 to 2025. One of the most impactful tax changes, in my opinion, is the sixth one, which is all about hardship withdrawals from your retirement plan. This change is going to have a significant impact on people under the age of 59 and a half. If you're under the age of 59 and a half and you make a withdrawal from your retirement plan that does not meet an exception, there's a 10% tax penalty in addition to the taxes you have to pay. Well, we all know that the economy is a bit rough right now, so you may find yourself needing to pull money out of your retirement plan. Well, now you can withdraw money from your retirement account penalty-free once per year for a personal or family emergency. When it comes to a hardship, the IRS takes a facts and circumstances approach. The hardship has to be immediate and heavy. Some things other than a personal or family emergency that are considered to be a hardship are domestic abuse, certain medical expenses, unemployed health insurance, funeral expenses, tuition and educational expenses, and payments on your home to prevent eviction or foreclosure. Now, if you have other resources that can pay for these expenses, it's not considered a hardship. So if you take funds out of your retirement account, you're supposed to pay the 10% penalty. The seventh tax change is especially important if you have lower or moderate income. The earned income tax credit will decrease the amount that you pay in taxes, and it can possibly increase your tax refund. To qualify for the earned income tax credit, you can't have investments totaling totaling more than $11,600. You can't have foreign earned income, and you must have dependents, or if you don't have dependents, you must be from age 25 through age 65. So for 2024, the amount that you can get for the earned income tax credit has increased. Please take a look at the chart on your screen for the income limits and potential credit amounts. Taxpayers are always interested in the 8th tax change because it will determine the maximum percentage you will pay on your taxable income. I am referring to tax brackets. The amounts in each tax bracket have increased, so if your taxable income has not changed from last year and you were right on the edge of a bracket, you may end up paying lower taxes for 2024. For example, if your taxable income was $100,000 in 2023, you were in the 24% tax bracket. For 2024, $100,000 puts you in the 22% tax bracket. By the way, you should always try your best to have as many credits and deductions as you can, so you can bring your taxable income down to the lower tax brackets. And finally, the 9th tax change is all about the standard deduction. The standard deduction can possibly bring your taxable income down into a lower tax bracket, but no matter what, the standard deduction will decrease your taxable income. The standard deduction will be higher for everyone in 2024. The standard deduction for singles will be $14,600. If you file head of household, your deduction will be $21,900. And for married filing jointly, the deduction will be $29,200. If you can't or don't want to itemize your deductions, you can just go with the standard deduction. Really, you should always compare your itemized deductions to the standard deduction though. If the standard deduction is more, you should go with the standard deduction. Hopefully, some of these changes are good news for you. If you want to know more details about some of the tax changes mentioned in this video, you may want to watch some other videos. If you want to know more about the EV tax credit, please watch the video in the upper left of your screen. If you want to know more about a health savings account, please watch the video in the lower left of your screen. Take care.